All right, we're going to get started. I really appreciate everybody showing. I've got my little reminder to hit record. One time I didn't hit record, and it's no fun when you don't get to listen to the whole webinar again. So I'm going to put my contact info in the chat. During the presentation, if you have any questions, please put them into the chat. If I see them, I will answer them if it makes sense to do it. But definitely at the end of this presentation, we will have plenty of time for Q&A. Once I start presenting, I lose a little bit of my view of everybody on the call. So we're going to get started. So tonight, we're talking about one of my personal favorite subjects, the 7 steps to passive investing in commercial real estate. This to me is the basis for everything I do in my life. All of my goals, everything I do is to really around the format of teaching people about this. So this is an educational series. I am not your financial planner. I'm not your lawyer. I'm not your accountant. But what I do is I present what I believe to be the best information based on my knowledge, what I know about different things in commercial real estate. You should always do your own due diligence whenever you are making any financial decisions, any investments. All investments do carry risk, and you can lose your money. So a little bit about myself. I refer to myself as somebody that coaching and mentoring and a strong team changed my life. I was always interested in real estate, but I was afraid of toilets, tenants, and trash. And so I didn't really do anything about real estate. And I always wanted to get involved in commercial real estate. But I believed that I needed to become a millionaire before I could even consider some sort of investing into commercial real estate. Then one of the companies I worked for at the time got bought out. I got a good payday. And so I decided I would start looking to see how I could learn about passive investing or even anything to do with commercial real estate. I actually went to 2 other webinars, weekend 3-day things. And I'll be honest, I didn't believe anything those folks told me. Then I found a group, Phil Grove's Big Dogs. I'm part of the commercial program, which is called Canis Major. And this was the first time that anybody talked to me about syndication. And I'll be honest, I sat there and I was like, this is what I've been looking for. Where have you been my whole life? So we'll talk a little bit about that. I started out as a passive investor, and I've invested as a passive investor 20 times. And then I switched over to be an active deal sponsor. And we'll talk more about that in 2 weeks when I do my next presentation. So I've been a total of 33 deals. I always love connecting and talking with people. So in the chat that I put, there's my LinkedIn tree, which has all of my information, along with a link to book a call. I love talking to people and answering questions. So again, I don't know how many of you as a child played Monopoly. I loved Monopoly. And I knew that if I didn't buy hotels and then upgrade, or sorry, houses, and then upgrade them to hotels, if I didn't buy good property, I wasn't going to win the game. But I'm going to be honest, somehow that lesson lost me when I went into what I'm going to call the real world, my world, where I went to work every day. I went around this board collecting my pay. Now, I had a good job. I did really well, but I missed out on tons of opportunity. And we're going to talk a little bit about the power of starting early, the power of reinvesting, keeping your money compounding. So again, don't get caught just doing this where you're trading your time for your money. We all know the power of real estate. That's why you folks are here. So we know if you're doing cash savings, you have no cash flow, no leverage, no real assets, no tax advantages. Bonds, you get a little cash flow and tax advantages. Stocks, you'll get some cash flow and you can use leverage. But on real estate, you get cash flow, you get leverage, which means you're allowed to use bank debt to help leverage your purchases. So you can buy something, let's say a $10 million apartment, and you can put $7 million worth of debt, and you don't have to raise all of the money to be able to buy it. It is real assets. So there's a huge thing where when you're buying actual real assets, so when you're buying stocks, you're buying a position within a company. You're not buying any real assets. And then clearly for anybody that knows, real estate has significant tax benefits. I've talked about it for the last little while. The big beautiful bill passed. There are some very positive things in there for real estate investors, including the bonus depreciation going back up to 100%. That is a very powerful tool. So again, you want to take the money that you're earning in your job, you want to put that into passive investment so that your money works for you. And then again, you'll get to be able to use these tax advantages as an investor. So a little bit about Massive Capital. We're a vertically integrated real estate company. We're a developer of Class A retail town centers. We're owner operator of value add multifamily. We have most of our assets are in the Texas market. We do have 2 small apartments up in Denver, Colorado, 2 in North Carolina, and 2 in Atlanta, Georgia. We are partnered with a company called Realty One, and Realty One is the one that's mostly on our retail and development side. So Realty One has about 300 million in assets under management. Massive Capital has about $210 million in assets under management. So we raise capital from investors, from family office, different things. Through Realty One, we have a triple net. So that's what happens when you have retail developments. Triple net means that the tenants are paying the expenses. We have a brokerage company that does that. We do land development. I'm going to talk a little bit about an opportunity if you're in Central Texas to come and look at one of our developments, steel frame construction. And then we do have a mastermind for massive masters for those that want to switch over and from a passive investor to learn about being an active investor. So again, I talked about this every week. I talk about actively passive. And you think, well, how can I be actively passive? What does that mean? What that means is you need to learn, you need to get educated. And that's what this whole lesson is tonight, how you're going to learn, what you're going to do, all of the things that you need to take the steps so that you can learn how to become an investor. It's super important that you do your due diligence, you learn, and you want to be able to grow and to be able to develop as a sophisticated investor. Then there's actively active. So if you're ever interested in becoming active, where you'd like to say, well, I'd like to do what Trevor did, switch from being a passive investor and become a deal sponsor. We do have a 3-day Centurions. We have one next week in Austin. Then we have them in Houston and Dallas. Right now, those are the only cities that we're doing them. So if you want to get some more information about those, let me know. This is Phil Grove and Chino. They were my original first coaches. And Phil tonight, if you're interested, he is doing a webinar at 7. So after I'm done, if you still have some energy left and you'd like to learn more about commercial real estate, he will be talking about that. And I actually think it starts about 7:15. They seem to have this thing where they don't start right at 7. So what is passive investing? So today I'm going to do, and this is a pretty beginning, pretty elementary, but there are some important things that you need to make sure that you understand, right? So tonight we're going to talk about the fear of investing, the 7 steps of passive investing. What is a syndication? How to grow your wealth? Are you taking massive action? And then as always, we have an open discussion for Q&A. This is the entire Massive Capital team. So this is Sanjay. Sanjay is actually who I made my first passive investment with 6.5 years ago. So it's just so amazing how life goes through and you meet people, they influence you. And then so now I've joined up with Massive Capital. They've been in existence for 3.5 years. I've been with them for 2.5 of those. Then Mike Bailey became a really good friend of mine. He's also in my other program that I do. And then Shirar, and then Jasmine is my counterpart. Later on, I'll talk about the ladies group that she runs. It's an amazing program. So how many people are afraid to think about passive investing? You're like, I'm really nervous about this. I really don't understand what they do. I don't know who to trust. I don't know the different things. And I'm just afraid. I'm going to be honest, that was me. I suffered from what I refer to as analysis paralysis for a long time. I was always interested to join, always interested to go to do different things, but I never ever took any action. And I knew better. Think about this. So I owned stocks. I had stocks before. Did I know really very much about the companies in the stocks? Did the people that I invested in their stocks, did they know me? Did I understand how I was making money? I really didn't. I kind of felt like I was on the luck of the draw, right? So if things went good, my stocks went up. I can remember when COVID first hit. I lost a third of my net worth in one night, it felt like. And I was like, I'm powerless. I have no idea what to do. I just don't know how to be able to. And that's when I started more actively looking at passively investing in commercial real estate. So the most important thing is you need to learn the power of passive investing. And until you really understand this, until you understand that I can grow my money, and we'll talk about it a little bit later, but I want to talk about the power. If you can put $100,000 a deal and you can double that in 5 years in one of the most tax efficient ways to earn money, that's incredible. How many people think, oh, I'm going to buy $100,000 worth of this stock, and I know in 5 years it's going to be worth $200,000? I challenge you. I mean, yeah, does it happen? Of course it happens. There's some stocks that have just gone crazy. Things like Bitcoin have gone crazy, but it is not the norm. Where in real estate, it is more the norm. So what you need to do is you need to get educated to learn the power of passive investing. You need to become what's classified as a sophisticated investor. Sophisticated investor is somebody who's taken the time, who's learned. That's a big thing of what I do. I spend a lot of time talking to people to understand what do I do? Why would I do it? Who should I do it with? There's a lot of questions that you need to ask to make sure that you're getting the right answers. Because again, don't ever doubt it. You are spending your hard-earned life savings and you are giving them to somebody else. And it's really quite crazy. I gave my money to the stock market. I didn't know anybody. I mean, I invested in Amazon, but Bezos, he never called me, never sent me a note, never did anything. Now I'm a customer. I'm a satisfied customer. But again, I didn't really own anything. I was just at the mercy of what happened in the general market conditions. Then you need to find the money to invest. I know that sounds rather simplistic. Well, again, how do I find the money? So again, when you do things, you need to learn, right? So you would want to have your job. You're obviously going to get paid for your job. You want to get a portion of the money that you're getting paid for your job and turn that into a passive stream of income. And again, we'll talk a little bit more about that. A lot of people don't understand that if you have an old retirement account, for example, you can roll your old and retirement account money into a self-directed retirement account money, and then you can actually invest in syndications with those. So again, you need to understand, how could I do that? What can I do? What are the things I should do? What are the things I need to learn to be able to feel comfortable to do that? I can tell you from experience, when I actually first started all this, I actually hired a financial planner and I had them look at my 401k because I got let go from my job and I just left it there. And I was shocked the amount of fees that was collected in the deal. And while I always believed I was getting plus 10% returns, I was actually getting about 7%. I've got a really good friend. He was a lifelong civil servant, had his money in a thing. He told me that on average, on the 20 years of his program, he was only earning 5.5% on his money. So step three, and this is a really big step, you need to find a sponsor that you know, like, and trust. And that's a really hard thing to do, right? Nobody sends you, I get sent a ton of deals, and I'm sure all those of you that are real estate investors get sent a lot of deals. Nobody sends you a deal and says, hey, I've got an average deal. I think we're going to make some money. Would you like to invest? No. Everybody has the best deal. Everybody has, you're going to make this much money. You're going to do this much money. I get sent deals sometimes. They're going to triple my money in a year. I'll be honest, I don't believe it. because I don't know necessarily who they are. And there's a lot of people that are out there. You know, I had somebody contact me on Monday and they said to me, well, Trevor, I got a Facebook lead. Somebody sent me a thing for a deal and it sounds like a really good deal. And I said, do you even know these people? Don't ever look at something for somebody you don't know. That's the one of the beauties of being in real estate, that you're going to find people that you know, like, and trust. And so again, when we do deal presentations, we're going to present deals with people that we also know, like, and trust. We're part of the deals with them. We're part of the co-sponsorship team with them so that we know that it's going to happen. Now, does that mean that every deal is going to be perfect because you put your trust in me or Massive Capital or somebody else? Absolutely not. There's definitely deals come and go and there's some great deals, there's some average deals. But again, you want to make sure that you're investing with somebody that you know, like, and trust. You are giving them your life savings. So you need to decide what type of investment suits you. There are all different types of investments. Now, when I first started investing, I was very heavily invested in multifamily. That was the asset class that I learned the most of. We all know that there's a housing crisis. We all know that most Americans now will never, ever be able to buy a home. They've been priced out between interest rates and the cost of housing. There are people that are going to be lifelong tenants now. There's a big opportunity in that space, and there's lots of things, but you need to understand what am I interested in doing? And I always talk about when I passively invest, I wanted to earn and learn. So I wanted to invest in something that I was interested in. I also invested a lot in Texas because I live in Texas. Sorry, I thought there was another one here. I live in Texas, and so I like to invest in places in Texas because I could go visit them, I could see them, I could meet the sponsors. We do a lot of property tours. For those of you that were joined me, there was about 40 people that joined me on our property tour up in Fort Worth a couple of weeks ago. We toured one of our units and we showed how are we adding new value to this multifamily. How are we creating money for our investors? So just a little synopsis of what we did. We had some larger apartments, and I'm going to be honest, with the economy being a little stretched and people's resources being a little tight, we were really struggling to rent our largest 2-bedroom, 2-bath units. They were about $13.50 in rent, and people were really struggling. Those were the units that were sitting empty. So what we decided to do was to split the units. So we actually created a decent sized 1-bedroom, 1-bath for about $1,050. And then we built a studio in the back. And it's very interesting because it's long and skinny, so it doesn't really feel like a studio. You're not sleeping in your living room. There is a proper little living room. There's a proper bathroom. There's a small but full kitchen. And then there's a seating area. And so these apartments are about 480 square feet, and we're renting them for $950. And we've created 6 of these. And so we were trying to collect $13.50 in rent. Now between the 2 units, we're collecting close to $2,000 in rent, which really increases us while meeting the demands of the neighborhood. So again, you need to decide. I also tell another story. You know, I wanted to do a self-storage investment. I wanted to do an investment in the Charlotte, North Carolina area. And I wanted to do an investment with some folks that I had met and spent some time talking with them. I was really interested, but I'm going to be honest. They kept sending me multifamily deals. They sent me one subdivision development deal, but I was wanting to diversify my portfolio. And we'll talk a little bit about that. And so I wanted to have something in North Carolina. I wanted to do something in storage. And then boom, they sent me the deal. I waited a year. Okay, now I was still investing in other things, but I was fortunate something came through, came full cycle, and I invested in that deal because this was an investment I wanted. There are some other reasons I wanted it. I have a brother who lives in Charlotte, North Carolina. So now when I go visit my brother, it's a business trip, right? And you can do a business trip where I go visit the asset on Friday and Monday, and I can have the weekend off, and I can expense my trip. These are all things that you can start figuring out how to do it and what type of investment suits me. You need to understand your investment. I am invested, like I said before, 33 deals, and not one deal is the same as another deal. Now, the general principles are similar, but they're all different deals. They all have different timelines. They all have different structures. So, for example, some of my development deals, there's no cash flow. We're buying a piece of land, so we have a retail here in Austin. We're building one in Houston. We bought some land. We spend about a year building it. We spend a year leasing it up. We get it stabilized and we sell it. It's not producing any cash flow. I'm going to be presenting soon an RV park. Has great cash flow. And is, it's got some great but so every deal has different parameters. What you want to be able to do is understand, what am I getting into? What are the timelines? And then, to be honest, what resources are best suited to those deals? For example, on development deals, I like to use my retirement funds because there is no value of the bonus depreciation that I talked about earlier within my retirement funds because it's already a tax-free haven. On new development, there is no bonus depreciation because you're buying dirt and you're building it. The next buyer gets to have advantage of the depreciation. So it's a great one. Now, does that mean don't invest your retirement funds in a multifamily? No, it just means that you have choices, but you need to understand what are the best choices for what I'm trying to do within there. So again, my goal is to help you evaluate deals, look at deals, understand the nuances, understand, does it fit what you want to do? So again, for most of my investment, and again, I've only been 6.5 years, makes it sound like I've been a lifetime, feels like a lifetime. I was on wealth creation. And we're going to talk a little bit more about wealth creation, right? For most of that time, I had a full-time job still. So I was looking to grow my money. I wanted to grow my money as quickly as possible. I didn't need any cash flow to live on. I didn't need other things. So again, you want to understand what the value of the deal is to make sure that you do it. Now, this one sounds like a very simplistic slide. Just do it. Okay. It sounds easy to say, right? Just do it. I'll be honest, the first time that I wired $100,000 for my first real estate investment, man alive, my heart was palpitating. I was like, what in the world have I done? I couldn't sleep all night. I was like, I can't believe it. I met this guy like a couple of months ago. Seems like a good guy, a good group. They told me what they're going to be doing. How in the world did I just send those people $100,000, on a wire transfer? Now, once you get going, it gets a little easier. But so many of us suffer from analysis paralysis. We're never quite ready to get there. Well, I just need to learn a little more. I need to look at a few more deals. I need to talk to a few more people. And at some point, you just have to do it, right? There's just no about it, right? So again, our goal is to provide a lot of the motivation, to provide some of the education, some of the things that will make you more comfortable to start your journey towards financial freedom. So again, this is why we all do it, right? If you remember my Monopoly board, we're going around the board, collecting our pay, doing our different things. We all know the people that own the houses and the hotels, they're the ones they're the ones winning the game. They're the ones making the money. But so many of us don't see that in our own investment lives. We don't see how we're going to do that, right? So again, Warren Buffett, I love Warren Buffett, and he says if you don't find a way to make money while you sleep, you will work until you die. It's a pretty simple thing if you think about it, right? If you don't have a way for your money to work for you, to create those second streams of income, and even though I had a really good job, and I'll be honest, during COVID, they got rid of 2/3 of the company. I understand why. I was in the development side. They weren't developing, they weren't opening new locations. I don't blame them for doing that. But at some point, you've got to make sure that you have these other streams of income so that you're not reliant on your pay to be doing it. Now, this is a very simplified slide and it has some pretty bold assumptions. It assumes that you double your money every 5 years and it assumes you have no tax consequences. We all know that eventually we'll have tax consequences. If investing through a Roth IRA, you have no tax consequences. A self-directed IRA, you're just deferring the taxes until you take them. Obviously, if you're investing with cash and you're not a professional real estate investor, you can't take full advantage of the bonus depreciation. But I didn't want to clog it up and say, well, this bucket, that bucket. So I took taxes out of the scenario. And again, I'm not naive. I know that we all have to pay taxes, and I know that you may not always double your money. But what I wanted to talk about here is the power of letting your money grow. So we talked earlier about the power of leverage in real estate. And for those of us that are in the real estate game, we know that being able to borrow the money and to be able to put almost 70% of the purchase price with a bank loan offers the deal huge amount of power to be able to do it. Well, this is the power of compounding your money. So again, this assumes if you invest 100K, 5 years later it becomes 2. The 2, 5 years later becomes 4. The 4, 5 years later becomes 800. The 800, 5 years later becomes 1.6 million. The 1.6 million becomes 3.2 million. Now, what I want to make sure that you grasp on this slide, that this is one investment of 100,000. So you've taken $100,000, you're growing it, and you're continuing to invest your original principal and all of the money that you have earned. So this is what I'm going to refer to as the big wealth creation bucket, right? And again, a lot of you folks on the call are much younger than I am, so you have 25 years to do this. I'm not too sure I've got 25 years. I'm 65, so I might have a few more years. But again, this is super powerful. And if you were wise enough, which is something I didn't do. So again, a lot of my advice is what I didn't do and what I didn't learn. If you'd have converted this to a Roth IRA, so you decided, okay, I'm going to take the hit on the $20,000 or $30,000 taxes on this. This will actually grow tax free, which is absolutely mind boggling that you would start with $100,000 and you would end up 25 years with over $3 million.
And now, here's someone you want to hear from, our sponsor.
For over 15 years, Skyline Title has been a trusted name in Texas real estate. From first-time homebuyers to seasoned investors, our team ensures a smooth, reliable closing experience every time. Backed by a decade of partnerships and proven success, we take pride in protecting your biggest investment, your home. Visit SkylineHTX.com to learn more.
100% tax-free. And it also, you could, when you die, your heirs can get a stepped up value in it. So again, it's a super powerful when you're talking about the wealth creation. Now, again, let's assume that we'd have made more than one initial $100,000 investment. This thing just continues to get on steroids, right? So again, even if you, every 5 years you just invested another $100,000, I'm talking about this growing to be more than $10 million. So one of the things that I want to make sure that you understand, passive investing in commercial real estate is not a get rich quick. It is a get richer slow. Okay, so you're going to get a lot richer. 90% of all millionaires of America became so through real estate. So Warren's partner, Charlie Munger, who just passed away, the first rule of compounding is to never interrupt it unnecessarily. This next slide shows the real power. We all know Warren Buffett is a long-term investor. He always reinvests his proceeds. He lives very simply. And you look at the power of this, right? So at age 26, he was worth 26,000. By 30, $1 million, 25, 34. And again, you can see this is the slide that I was talking about. Now, again, chances are we're not all going to be worth so many billions of dollars. But again, let's hope we're worth millions of dollars because we've created this. So I remember when I turned 65, somebody sent me a text that said Warren Buffett created 50% of his net worth after the age of 65. Why? Because his money compounds. His money is always working. His money is always invested. He invests his money, he makes money, and he reinvests the original investment and the money he makes. He's continually growing it, right? So again, this is the power of passive investing in real estate. Now, I'm going to bet you that some of you people think this is, I don't know, this is a scary time to buy real estate. And I'm not going to lie, it's a scary time to buy real estate. A couple of sessions ago, I did a thing where we talked about that there's, billions of dollars of multifamily debt that's coming due in risk of foreclosure, do different things or whatever. And again, Baron Rothschild said, buy when there's blood in the streets, even if some of the blood is your own. Okay, if you interrupt the flow that I was talking about earlier, and you say, oh, I'm going to pull all my money, I'm going to put it into that cash that doesn't grow, doesn't have any benefits, doesn't do anything, I'm going to wait until things get better. And again, I'm not talking about foolishly investing. I'm not talking about not doing your due diligence. I'm talking about that you must keep your money moving. You need to stay in the game. So again, let's talk a little bit about what syndications are. So we have syndications. And so a real estate syndication is a group of investors who pool their money to buy or develop real estate. Syndications are a way for investors to invest in larger properties that they could not afford on their own. I'll never forget the first time that I invested in a property. I put money into a 40 million, not one of the first time I invested in a big property. It was a 300 unit class A multifamily in Denton, Texas. They had Peloton bikes, a saltwater pool. I mean, a real dog washing. I mean, it was creme de la creme. And I remember I wanted to go see it, and they had a tour of the property, and I wanted to go see the tour. And I was like, I can't believe I actually own a piece of this beautiful property. And one of the questions, Chad, 100 grand, most deals will have a minimum of around 50. And you can talk to the sponsor that's doing the deal. Several times I've been allowed. So that deal, the $40 million deal I talked about, their minimum was 100,000. And I said, right now, I don't have 100. Could I invest 50? And they allowed me. So again, you can talk to a sponsor. I've invested as little as 25,000. And we'll talk a little bit about when I talk a little bit further on the different syndications that are offered. So how does it work? Sponsors, general partners, they're experienced real estate. So again, it's those people you know, like, and trust. They organize the syndication, they secure the funding, and they implement the business plan. So again, they're going to buy this multifamily, this whatever business it is, they're going to buy it. They're the ones who are going to arrange the bank debt. And again, when they're doing all these things, they need to be experienced, right? So if I said when I was first starting out, well, I'm going to go buy a $40 million apartment complex, banks would laugh at me, brokers would laugh at me. It was just impossible, right? Because you need to have at least you need to have the net worth of the loan plus 10% liquid. So again, on a $10 million loan, you have to be worth $10 million and you have to have $1 million liquid. Now that can be spread out amongst the GP team, but again, they have to have those things. They have to have the experience bucket to be able to get the loan. They have to do all of those things to be able to arrange it. And then what we do is we'll buy the apartment. So again, let's say we're buying a $10 million apartment and we're going to get a $7 million loan. We'll probably need about $5 million from passive investors because we're going to have closing costs, CapEx, reserves, all the different things. And so we would raise that from investors. Okay, but the beauty of this, and I want to make sure that you get this, you own a portion of the asset. So again, when Massive Capital does a deal, our normal split is what's called a 70-30 split. What that means is our investors own 70% of the asset and we own 30% of the asset. So our investors are our largest shareholders. Now, again, when you're raising something like $7 million, you're going to have a large number of investors. They're all going to own a percentage of it, but they actually own the part of the asset, which means they'll get all of the benefits, all of the tax deductions. Any earnings will come to them as capital gains. There's a lot of real strong advantages. You have limited liability protection as a passive investor. You can only lose what you've invested. no more. So again, if we buy a property and horrific things happen, okay, just horrific things happen, your only risk is your investment. The general partners sponsorship team, they take all of the risk. Now, again, on multifamily, most of those loans are non-recourse loans, but on all of our development deals, those are full recourse loans. So for some reason, something doesn't happen, they're coming after the folks that have signed on the debt for it, but they're not coming after the passive investors. It also allows you to target your investments on specific projects, right? So again, on my 33 investments, I've targeted it, right? So I have investments in Tucson, Arizona, Texas, Denver, North Carolina, South Carolina, Georgia, and I have different asset classes. So I have everything from value add multifamily, which are older multifamilies that we're buying, we're adding value, to the one I talked to you about in Denton, Texas. It was a brand new property that was bought from a developer. And I'm also a passive investor in a new development in Houston, Texas, where they actually built a 300 plus A-class apartment there. So again, you can have a whole variety of things. I have a medical center investment in Mesquite, Texas. Again, it's a great investment. It's not a real wealth creation because it has an interesting thing. It's a very safe investment. And when you're looking at investments, sometimes you go for safe, and I've got a slide on this a little bit later, and sometimes you want to go to make the gusto. So for example, that particular investment is just a straight 10% return. It's really more like a loan, a preferred. So it's only 1.5 my money, not a double my money, but comes like clockwork, right? It's double guaranteed triple net lease. So the doctors are personally guaranteed and their practices are guaranteed. So again, I wanted to make sure I had a successful investment. And then your returns are directly tied to the success of the project. So again, on all of the deals that we do with Massive Capital, we offer a 7% preferred return. So what that means is until investors get at least 7% on their money, us as sponsors, we don't get any of that split. So we have to make sure. So again, this is an investor first approach. This is saying we're going to pay you first. We appreciate you coming. We appreciate your trust in investing in us. And again, we're not doing this. We're doing this to make money for everybody. So our goal is, hey, listen, we're going to pay you first. And then once we surpass that 7% pref equity, then the 70-30 splits in it. Now, some of our other deals where there's the high risk, like the development deals that have full recourse loans, those ones are structured even a little bit different. So we have a 7% pref, we have a 70-30 split if we hit 17% internal rate of return or lower, and it goes to a 50-50 split if we do better than that. So again, the whole idea of it is, if we do just poorly and you make the 7%, we don't make anything. If we do average, not what we hope to do, it's a 70-30 split. But if we knock it out of the park, it's a 50-50 split, but each time you're paid more money. So you're paid first, you're paid the 70%, and then you're paid the 50%, which would be greater than your 70%. I know that sounds complicated. How can 50% be more? But it is. It's you're going to be able to grow your money. And with that 50-50 calculation, our goal is to get above a 20% internal rate of return. And again, that's all understanding the different types of investments that are out there. So there are two types of investments that happen. There is a 506B. And a 506B is where non-accredited investors can invest. So we'll talk a little bit about that. We must have a pre-existing relationship. So I have to know you, you have to know me. I have to have some documented that we have a pre-existing relationship, and they call it subsident. That's a little bit like, what does that really mean? To me, it means that we've talked a few times. I have an understanding of where you are financially, what your goals are. You have an understanding of who I am. I've somehow me and myself or my group or whatever has reached the know, like, and trust. And then you must be considered a sophisticated investor. And that's what these Tuesday webinars are, and some other things that we have. We help you become a sophisticated investor. Now, there are only 35 non-accredited spots available. And so our goal is to make sure that the massive capital community, so folks that are showing up at my calls, doing different things, have meetings with me. I have a thing. So if we have a meeting, and it's on the next slide, but if we have a meeting and you're saying, well, I'm not an accredited investor, but I really want to get access to your next deal, doesn't mean I want to invest in your next deal, just means I want to be able to see it, make an educated decision if I'd like to do it. Then I put you on a waiting for 506B list. Then when I have this deal, I'm going to send it to you right away so that you can get access to the deal to begin enjoying your financial journey with us. One of the things that can't happen is I can't generally solicit. So on Massive Capital emails, for example, we have about 15,000 people in our database. I know you know we send a lot of emails, but unless I have a box checked on your thing that says I have a pre-existing relationship and you're considered a 506B, you will not be sent that deal opportunity. You have to have that. We have to control that we have that pre-existing relationship, has to be documented within my system because I cannot generally solicit on a 506B. We normally do a 506B offering for anywhere from 3 to 5 weeks. Depends on our timeline, how quickly we need to get the deal closed. Typically, we have about 3 months to get a deal closed. And then we switch our deals to a 506C. So on a 506C, only accredited investors can invest. You must be an accredited. And years ago, before the Jobs Act and some of the other things that created these structures, this was the only accredited people could invest in real estate. Only wealthy people can invest in real estate. So you had to have $1 million in assets excluding your home. So everything, if you own businesses, rental properties, personal items, whatever it is, stock accounts, different things, it has to be worth more than $1 million. We use a third-party verification for that. Or as an individual, an income of 200,000, and a married an income of 300,000. So again, you must be able to prove that you've had that income, and you must have every expectation that it's going to continue. But for me, there's no restrictions on soliciting. I can market it to anybody. So again, if we're connected on LinkedIn, you're only going to see my 506D C deals posted there because I cannot post the B. So again, I want you to know that there is no difference between a 506B or a 506C. It's only who can invest and can I market. So again, it's super important. Now, a little bit more on the $100,000 rule, okay, that you asked about the 50,000. If I have 35 spots and I have 35 people that want to give me $50,000, I can't accept somebody for less than that. Because again, my thing, I have to raise enough money to close the deal. It's in best interest for everybody. But what I've done in the past, I've had some connections with some people and they said, I'm just not there yet. And so what I've said is, let's do all of your paperwork. Let's get everything signed. And if I'm less than 35, I will let you in for less than the minimum. But if I'm not, I can't. Now, on a 506C, it's a little easier to say I could let somebody in for less than the minimum. But again, we don't do it often, but I want to make sure the opportunity is out there. Our goal is that you start your journey to creating financial independence. You start your journey to passive investing as quick as possible. And we want to do everything we can to help facilitate that for you. So again, if you want to learn more about passive investing, you want to get on my wait list, I'm going to put my book a Zoom call link in here again. Book a Zoom call with me. Let's talk. Let's get you on the list. And again, I want to make sure that I am clear. This doesn't mean you're investing. This just means I'm going to send you the deal and you can look at the deal. Without this, you're not going to get access to the deal if you're not in my database and you're not an accredited investor. So we talked a little bit about this earlier. You want to make sure that you're balancing your investments on risk, reward, time, and different asset classes. So again, I never tell people to only invest in the highest risk deals. And again, all deals have risk, but some have greater risk than others. Some have less risk than others, like the medical one I mentioned. It's a 1.5 my money, not double my money, but the risk is like way down here. My money's coming. I mean, it's coming and it's going to come regularly. You want to look at reward, right? When am I going to do the deal? When's going to happen? And you're going to want to look at time. So again, when I showed this little chart with doubling your money every 5 years, It doesn't mean that you will invest in, this 100 will go into, and you're going to put 200 into one deal and 400 into one deal and 800 in one deal. No, I don't recommend that. I want you to balance it out. So again, some of our development deals are 3 years. Most of our multifamily deals are 5 years. That storage unit that I invested in, it was a 7-year deal. And again, I wanted to make sure that I had my timeline balanced, right? I want to always be sure that my money keeps moving. And I also want to be diverse in my asset class and a little bit in my locations. I love Texas. Texas is a great place to invest. And if you'll notice, I invest in only, pro-business, pro-landlord, pro-friendly states. Does that mean people in California make no money? Absolutely not. I got some friends out there that are killing it. It's just, I'm not going there. I'm going to stick to where I know what I know, different things. So again, imagine if we're playing baseball and I'm the coach of your team. And I said, everybody on this call, you have to hit a home run every time you go to bat. Do you think we're going to win the game? Do you think we're going to win the World Series? We are not, right? You talk about people with 500 batting average. That means, they missed half of the times even hitting the ball. You got to make sure that you have a balance, right? So when you're looking to balance out, especially as you start investing in others, look for some singles, some doubles. And yes, you want to make sure that you have a home run. And you want to be able to do it, right? So again, massive dreams need massive action. So you've got to be sure you're taking action on this. You're one decision away from a new life. Do not be that person like I was for years and procrastinate and not make the decisions. Now, if you are in the state of Texas and you're interested, this is actually our new development deal here. You can see I've got a construction photo there. But if you're interested to join, so we do these property tours. We call them educational property tours because we believe that that's going to help you learn. So I'm going to put a link in the chat. I'll also have these posted on my Facebook and LinkedIn if you want to join. So it's next Wednesday from 3 to 4. You need to reserve so we know you're coming and we can give you updates. And we're going to walk and we're going to talk this is about 110,000 square feet of development. So a whole different plans. There's some different units and different structures. But if you want to just come and learn about it, we're always doing tours. So we've done tours of new build retail. We went to a groundbreaking for one of our assets that we're building in Houston. So we do these tours. And again, they are mostly, I did one tour up in Denver when I was up at a meeting up there. So, and then if you are a lady here tonight, you should be joining Jasmine on the she. So she is the opposite Tuesdays of me. So again, I'm going to put a link in the chat here. If you're interested to join and attend, Jasmine does a great job, has great speakers. And again, my goal is to help 100,000 people reach financial independence through real estate investing. That's a lot of people. I hope that you'll join me on the journey. I think I got all the questions in the chat. I'm going to stop sharing and see. Does anybody else have any questions? You can unmute yourself. You can post it in the chat. Anything that you want to ask, anything you want to say. I'm happy if you share your experiences. I did such a good job. Nobody's got questions. Awesome. I'll give it a few minutes to see if you have questions. And again, I do this every other Tuesday night. So if you enjoyed this, if you learned something, I would really appreciate it if you invited a friend and came back. My goal is to be able to help educate people so that they can understand the power of passive investing in commercial real estate. If you're interested in learning more about becoming a sponsor, whatever, Massive Masters is an amazing program. I know there's a couple of folks on this call that are part of my Massive Masters program. It's a great program. We're looking at all types of asset classes. It was super, super exciting. I actually did with one of the private groups I'm in, I interviewed a lady who's doing assisted living. And I gotta be honest, I learned more about assisted living in that hour. And I had some preconceived ideas that were wrong. So it's interesting, right? Again, I've been doing this for a long time. I've looked at a ton of deals. I've not invested yet in assisted living, but I'm starting to get interested in it. And that's how you get educated, right? You start show up at these events, you show up at different things, you learn. I'm not the only person out there giving anything. No, thank you for the nice compliments. I appreciate it. And you know, our goal is, oh yeah, Phil's webinar. I'll send the link again. Let me just find it. I think he starts 7:15, but it said 7. A couple of times I've joined at 7 and he hasn't been there. But if you want to join, and he talks a little bit more about the active side and how you can make money on the active side of real estate. So again, when you're a passive investor, your money works for you. When you're an active deal sponsor, we're going to talk a little bit about that the next session. My money works for me because I often invest in my own deals, but the people that invest with me, their money works for me too, right? So again, when the 70-30 split happens, so I've made passively invest in the deal and I would double my money just along with all the other investors. But that 30% is how I make money, right? So some of that money will come at the beginning when we close the deal in terms of an acquisition fee. I'm not collecting asset management fees because that's not my role within the group, but that is a way to be able to do it. And then you collect your share of the profits, right? So when we have $1 and we send 70 cents to the investor, 30 cents goes to the sponsors, I get my portion of it. So, you know, it's just a great way to be able to have that active income still. And then again, I'm now considered a real estate professional, so I can take full advantage of the bonus depreciation. If you have a full-time W-2 job, you can only use bonus depreciation on your passive income. So passive losses go against passive income unless you're a real estate professional. Again, I'm not an accountant, but if you're a real estate professional, which means you're actively involved in deals and you're doing active duty work, then you can write off the whole bonus depreciation. And just to give you an idea, like before the thing done, it was at 40%. So if I put $100,000 in a deal, I was probably getting about $30,000 of bonus depreciation. So again, that's a negative loss of $30,000. If you have a tax situation, it's basically the government lending you that 30,000 back. It will now go to over $60,000. So again, it's amazing. Now there is recapture, there's some things, but you want to make sure. So awesome. Any more questions? Look, I'm giving you 4 minutes of your life back. How about that? So what I want you to do is spend 4 minutes thinking about how can I start my way to financial freedom. So again, thank you everybody for showing up tonight. I really appreciate it. I've got a couple of loyal Natasha here. Natasha never misses anything. That's like she's always here, so I appreciate that. And there's been a few folks that are starting to join. There we go, get the heart. She doesn't ever have her camera on. She always says she's not camera ready. She's one of the prettiest women I've ever met. She's always camera ready. So, but anyways, very good. Thank you so much for everybody. Really appreciate it. And I will see you in 2 weeks. Thank you, everybody. Good night. Make sure you book a call with me.